Every Saturday morning, we feature a program called Retirement Matters. Just kind of helps you keep an eye on your money or your retirement and your financial future, basically. And Dale Smothers hosts that program, and he is in the studio this morning. Dale Smothers, good morning to you, sir.
Good morning, Larry.
Good to have you on the Big Dog radio station this morning. You know, I have purposely not been watching the NASDAQ or Wall Street numbers this week because in anticipation of your morning visit to the Big Dog, I was wanting you to just kind of, I know last weekend we were doing good, closed out last week good. This week I have not looked at it the entire week. So this morning you can surprise me with any surprises now that should arise.
It's a surprise. The market is going to open today. Specifically, it's going to open down. Donald Trump recently tweeted on his social media platform of choice and has announced a couple of things that he would like to see change with the European Union trade deal and threatened a potential tariff retaliatory tariff, I guess, if you will, on Europe if they don't come to the table. This is where all the volatilities come from in the recent month and a half. It's been around tariffs, and I foresee that continuing over the next 2 to 3 months as things start to settle out until we see resolution, a permanent resolution on this tariff trade deal and all the talks that surround it. We're going to see volatility, Larry. Over the last week, the last 5 days, not been incredibly good for the market. But you're exactly right. We have climbed back from this massive correction, and that has been a good thing for a lot of people's 401ks.
What was a 5,000 point differential?
Absolutely. I mean, the S&P 500 is a really good gauge of the overall U.S. stock market. We've seen the S&P 500 at as high as 6,100 points, and it went to as low as 4,900 points in the dip. And we've now climbed back. We closed yesterday around 5,800 points, which is incredible, an incredible turnaround. I expect the market, and it's been a few minutes since we've looked, since I went on air here, it's been a few minutes since I've looked at it, but I expect today the market to open around 5,700 points, which is a little bit of a dip from where we closed yesterday, all around these tariff announcements that were kind of tweeted out as an idea. Now, if you read The Art of the Deal, you're going to see how bombastic, if you will, that Donald Trump is in his negotiations. It's his art, if you would consider it an art. And it is that he sets out a very unrealistic expectation to get people to the table. And then from there, meeting in the middle. China is a perfect example, a very unrealistic tariff that we couldn't withstand it as a country in the United States. China certainly could not withstand it as a country over there in their markets. They had to come to the table. There was a 90-day reprieve, so there's been no actual resolution with China, but there is a 90-day pause. During the 90-day pause, the standard tariff difference is about a 20% difference between where it was till now. For America, that's a very good deal. So during the pause, they said, hey, let's cool down for a little bit. China's going to move their tariffs a little bit more in our favor. We're going to move our tariffs a little bit more, again, in China's favor. It was a negotiation tactic. We met in the middle, and America was better off for it. Because of that, the U.S. stock market went up. And during this 90-day reprieve, this 90-day pause, there's going to be a lot of announcements, a lot of talks, and the market will react to that. So what you're doing right now for the last week is exactly what an individual should be doing, Larry. Don't look at it just yet. Things will shake out in our favor in the long run.
It came out 47 minutes ago. It says President Trump is now threatening to hit Apple with a 25% tariff on iPhones made outside the U.S.
Yeah, and that's an altogether different tariff announcement. So this is it. This tariff narrative is going to guide the market. That tariff announcement that you're discussing with Apple is specifically because Apple was going from China to make their iPhones. They said, well, we'll go to India, which was a country that wasn't hit as hard on the tariff announcement that Donald Trump came out with. Donald Trump said, no, you're not going to China or India. We want that made in America. And if you don't do it, here's a 25% tariff. Now, I'm going to tell you, that's not going to happen. 25% tariff on Apple is not going to happen, but it's a negotiation tactic to get Apple to start bringing manufacturing here to America.
Right.
And with that, I think, again, American economy, the American worker, the American taxpayer, and the American stock market has benefited from this. So altogether, I'm not saying that we're going to have smooth selling every single day from now till, say, the end of summer. But by the end of summer, I do believe that we see things shake out in America's favor, and the U.S. stock market is better for it. So here's some things that you need to be doing right now as we start to see the market maybe have some volatility. If you're close to retirement, Larry, I would say that it's time to start looking at your risk and make sure that you're not taking too much risk. We see a lot of people who are closer to retirement financially than they ever thought possible, and we can help them align that. And one last thing, if you're not close to retirement, use these dips as buying opportunities to buy really good names such as Apple that will be there for the long haul and do nothing but go up over the decades to come.
Tomorrow morning after the 9 o'clock news, your man Dale Smokes. He'll be on the big dog. I'll see you there. Dale, good to see you, brother.